an honor to like follow up after the amazing talk that we just had. But what we're going to talk today, I see, is a little bit about fundraising, which is, I think, that is something that has become even more important in the most recent like macroeconomic state that we're in, right? And something that is also like become harder, right? Because money has become more scarce, I see. So what I thought we would do, right, is just to give everyone a quick introduction. So from Niamh, do you have a mic or? Oh, perfect. Perfect. Let's have everyone do a quick 45-second introduction about themselves and about the fund that they represent.
Thanks, Menno. Yeah, I'm Niamh Sterling, and I'm a partner in Further VC. My background is that I'm an entrepreneur. I founded my first company when I was 26, exited that in another company I co-founded in 2021. And then I was on the board of our family's firm, and that was acquired in 2022. So it 2 years of exits and due diligence. And then I was also a consultant for the Halo Business Angel Network, which is now with Dogpatch. And I've just joined Further VC as a partner in the firm. Further VC invests in medtech and B2B SaaS.
Super. Carole.
Hi everyone, I'm Carole. I'm part of the venture team at Eurazeo, which is a pan-European fund investing from seed to Series B. I'm based in London, and my team has been doing venture for about 20 years with over 200 investments in the portfolio, such as ULife, WeFox, Farfetch, and a few others.
Super. Kate.
Hi everyone, I'm very loud. Kate Fullen from Elkstone. I'm not Niall McAvoy, as you can see up here, but I'm a senior associate on the Elkstone team. We invest in both in the Irish market and internationally, but maybe for the purpose of this crowd might be most relevant. We've just launched a new fund, €100 million, focused on Irish companies, early stage Irish companies, which is really exciting. Makes us the largest seed fund in the market. We're sector agnostic investors, so out there meeting lots and lots of different founders. We had previously and continue to invest both in Ireland and internationally, but over the period of that initial stage of us investing in the Irish market, we had some really great Irish companies, the likes of Let's Get Checked, the likes of Flipdish, some emerging winners like Protex AI. So this new fund is really our doubling down on this market. But as I said, continuing internationally as well from kind of Series A onwards.
Super. Filippo, last but not least.
Hi folks, my name is Filippo. I'm the managing partner of the AgileGTM Web3 Accelerator. We are a newly launched fund that invests in blockchain. We're based in Lisbon. We invest in early stage. Our focus of our program is go-to-market. And we invest in companies that enable enterprise adoption of Web3. I'm also the Chief Commercial Officer in Residence of Techstars Web3 and Portfolio Advisor for Sure Valley Ventures.
Amazing. Look, what I absolutely love about this panel, right, is that we have a variety of stages that they're investing in, from relatively early stage, right, with the Accelerator fund, to all the way like at Series B with what you are doing at Eurazeo. Because you're looking at a variety of stages of startups as well, right? Can you talk to me a little bit more about what you're looking for in a startup? What's one of the key elements you're looking for? And what is the preferred way for you to show them this to you in a pitch? Filippo, do you want to kick off?
Sure. So I think that given the fact that a pitch is kind of a short period of time to understand, is there a match or not? It's kind of, we're kind of looking at each other and saying, okay, do you want, it's a two-way street in a way. But I think the main thing that I would look at is there potential in terms of commercial viability. That's for us at least, and obviously that's also the focus of the accelerator, but it's really understanding whether the idea can make it to market or not. And that's based on simple revenue architecture and understanding. It's going beyond the market size, I guess, or showing, oh, this is the addressable market. It's how can you take that addressable market and kind of you commercializing your idea into that addressable market and actually making it happen. So that's a big part for us.
So how do you commercialize, Kate?
So I suppose it differs whether you're looking at seed or Series A. They can be they're different stages. But if I start off with seed, because we do seed and we do some even pre-seed, and at that stage it's a little bit different. The main focus is you're really heavily focused on the people, but it's also market and product. And within a pitch deck, I think each of those areas needs to be covered. But the people side, I find, comes through the whole entirety of the deck. When you're reading a deck, I'm very much reading into the mind of this person in terms of understanding, first of all, what their own background is, how they describe a problem, how they describe their solution to it. And then it's about kind of trying to follow their stream of thought into building towards, why this is a big enough market, what their clarity in terms of their vision is for this market, and how they're going to ultimately get themselves from a stage when this is an idea right the way through to commercializing. So, a pitch deck, as Filippo said, is kind of I see it as a hook. You're trying to highlight some of these kind of why you're different on the people side, why you are the ones that can win in this market, what unique edge do you have in terms of understanding it differently. And then you're going into the market, touching off just how large of an opportunity that can be, and why there's space for someone like you to come in and to disrupt it. And then on the product side, it's really about, if you can have in a pitch deck something that's quite interactive in terms of what your product looks like. I think, again, a deck is only a hook. It's a hook to get someone on a call, and that stems through whether you're seed or Series A. I'll stop there because I know you'll probably talk really nicely about Series A, and that's maybe a good synopsis of the early stage.
I totally agree with everything that you said. I think maybe at seed, the people are obviously very important. Honestly, at Series B, it's still very important. But we would look also at things like unit economics and LTV CAC and the growth rate and the margin. And something important as well that is not really about the numbers, but it's more around kind of how the fundraising process is being held. For example, having a comprehensive data room is something that we would really value because it shows that you prepared it and you added some competitive landscape and some financials and so on, and it also reflects on how the founders is with his business. So that's something that we really like, someone also reactive and that knows their numbers. It's something that we will really value as well.
Niamh, actually for you, right, the same question, but I'm really curious to see, because you also invest in medtech, right, and things that might take longer to get to market, right, than, say, B2B SaaS, what are some of the things that are important to you that you're looking at, right, for a product that might not hit the market for another 5, 10, 15 years potentially, right?
Yeah, no, absolutely. And in many cases, the medtech companies are possibly likely to be acquired before they ever fully commercialize. And funny enough, I would say a lot of it is, even whether it be the B2B SaaS and medtech, it kind of starts and ends in a nice loop, as both Kate and Carole were both saying, with team, right? So particularly in the likes of medtech, obviously we're looking for a highly experienced team, understanding the FDA process, reimbursement codes, all of that is really important. But ultimately, when I'm looking at, when somebody comes in with a pitch deck, the first thing I'm going to do is have a look at the team, right? So I'm going to see why these people, why this market, why now, and what their value proposition is. And then as I work my way through the deck, I'm also trying to understand, I want to see that they're really obsessed with their customers, okay? Yeah. So I'm going to look at them and make sure that everything that they're showing me, everything from, even if they don't understand all of it, even if it isn't a fully formed team, I want to know that actually they're able to identify the gaps in that team. They know what it is that they don't know. And I also want to understand that actually they understand what it is they need to do to get there. So I'm looking at how focused they are and how obsessed they are on the customer, and how focused they are in terms of the metrics. Is looking at discipline, is looking at focus of the team, and your deck is going to tell you an awful lot about that.
Incredible. Yeah,
I was just going to add, I think the deck is the foot in the door. It's not the actual, it's about getting to know you, right? And then when you get to know you, then the tough questions start. And it's also about kind of responding to those tough questions and really understanding your market, like knowing who it is that you're kind of going to potentially sell it, whatever it is that you're selling this to, and how to position it to them. And that comes from really understanding what your market is. And it's imperative you're able to show, beyond the deck that you can follow through with that. So yeah.
Yeah.
And people invest in people as well, you know, so you are actually developing a relationship. When we're out and we're meeting really early stage companies and we're going and we're talking to everybody, you know, you get a development, or you get to develop relationships with these founders, because you're going to be in it for quite a long haul with them, you know, so you want to be really comfortable about who's sitting around the table together at your boardroom.
It's probably harder to like get a divorce than to get someone off your cap table, and you're going to be working together for the next while, so you better really like each other. One of the cool things about this panel is that we also do audience Q&A. So if you have a question, please pop them into the app, and I will try and make sure that there's time towards the end so that we can go through some of those as well. But Carole, going over to you, right? One of the things I think it's important for founders to think about as well is the size of the fund that they're pitching, right? And we're seeing a big rise happening in nano funds, right? Like 1 to 2 million, micro funds, 10 million. But then we also have large funds such as yourself that are having most recently raised 400 million euro funds and stuff like that. Can you talk a little bit more about the importance for founders to think about that, right? When they're pitching?
Yes, sure. So, for example, we are investing now out of a fund of 400 million. And so when we're going to make an investment, it's going to be super important for us to believe that it's going to be a fund returner. And to be a fund returner, the company has to address a market that is big enough. So, for example, for us, kind of a total addressable market of under 3 billion will be too small. And it's something that when you pitch to an investor, it's something important for you to consider. If it's a big fund, you're going to have to show that the market is big enough so that they are excited and that they believe that they are going to invest in the kind of next unicorn. And the second point also is that, I mean, as a VC, you're a risk taker and you believe that you will invest in the fund returner. And sometimes entrepreneurs kind of focus maybe a bit more on the downside protection rather than focusing on the upside. And that's where we're going to get super excited. It's about kind of showing us that there is a big upside and showing us the big vision that will make us dream and excited about your company. Super.
Kate, one of the cool things about your role is that you get exposed to a really wide variety of deals, right, across few different stages, but also across different geographies. What are you seeing around valuations in Ireland, in the UK, in mainland Europe, right? And what are some of like the differences that you're seeing even in how the founders like profile and pitch their companies to you for investment?
Yeah, if I start off with the Irish market, it's a really interesting time. It's an exciting time to be raising seed capital in the Irish market. There's lots of funds out there who are investing at that stage. So they have the likes of Further that Niamh is at. You have ourselves at Elkstone. You've got a number of other funds in the market as well. So it's very different to what the landscape would have looked like in Ireland, 3 or 4 years ago, even in terms of the ability of the market to support lots of companies at that stage. And really seed stage is the least impacted by, if you think about the current, economic situation, seed stage is always going to be the least impacted, pre-seed and seed. So valuations are definitely adjusted in the Irish market, but they were coming from a lower starting point. So probably a little bit less impacted than you might see internationally. When you look at the UK, for example, and even further on to the US, where we look also, the market there is really interesting at the moment because really a lot of VCs, if you speak to VCs in those markets, that the way that they're advising their portfolio companies is to not go out and fundraise. So there isn't as many funding rounds being done at A and B where anyone can help it. So lots of founders are kind of battening down the hatches, cutting burn where they can, trying to see themselves through a longer period before coming out to fundraise again. And that's across lots of different markets. That's the kind of common theme across many of them. But valuations in the UK and the US are higher than they would be in Ireland, although, as I said, that delta has definitely decreased over time. But some really exciting hubs like the likes of Paris, and in the likes of Berlin, loads of really exciting movements in those markets. And to your second question around how founders present themselves.
Yeah, how do they do it? Like, I'm assuming that the majority of the founders in the room here today are probably Irish, right? What are you seeing? Some like things that you're like, oh, geez, those like German entrepreneurs or those like American entrepreneurs are just doing that like better or smarter like than you're doing, or vice versa, even as well.
Well, in fairness, I think the standard in the Irish market has changed a lot over time because everyone's view is a lot more internationalized in terms of the kind of resources you can find online around fundraising and how you should present yourself and how you should present a deck. A lot of that is international, and especially when you see people coming through the likes of Dogpatch, who have this, the standard is increasing over time in the Irish market in the way that it maybe hadn't been previously. But sometimes you see, companies internationally taking a more international approach from day one. Often Irish founders can test the Irish market first before going abroad. But again, increasingly we're seeing Irish founders start to look internationally from day one. So I wouldn't even highlight that as a huge difference anymore.
Yeah, super. Filippo, when you're investing into startups, right? They're often at the very early stages, right? Like it's usually not more than a few people and an idea, right, that they have so far. What are the key things that you are looking for in those people that will pull the trigger for you that, like, I'm going to go and write a check into them over another team?
So actually, the Accelerator will invest in post-MVP ideas.
Okay.
Right? But the truth is, what we look for is how long does it take from the MVP to go to product market fit, which is the holy grail that everyone's looking after. And believe it or not, in Web3, product market fit is an elusive concept that is nebulous. It's very difficult to find because the space itself is very early. And so, obviously it's very difficult. But I would say it's the time to go from having something out there and having it tested, because at the end of the day, what is product market fit? At the end of the day, it's having a couple of people that have your product, that are satisfied with your product, and then are coming back and buying it again, and then potentially creating that sort of loyalty loop, right, at the end of the day. And how quickly can you get from that to that point where that it's tested, there is a fit, and that fit can then be scaled, because you have also what is called audience message fit in a way. You have an audience, you're putting a message out there, you know who your personas are, you know how to position that product, and then you're actually able to scale it. You're actually able to put more funds in, go raise more, and double down on what works until it doesn't work anymore, and repeat again. So yeah.
Yeah, no, absolutely, and like that scaling is so important, right? Because that's what every VC will be looking for as well.
Exactly. It's once a product, most or some of the fellow panelists here will invest in later stages, and it's usually when they're like, okay, well, we already have traction. There's a fit there. So for us, it's about getting you there, and that's why it's so important to see what how small that delta is in a way. So yeah.
Yeah. Niamh, one of the things that a lot of what's important for founders to understand is where the fund is in their life cycle, right? Yeah. Can you allude a little bit about that, share some thoughts about it, and why it's important for founders to have that as a key consideration to decide to what funds they want to pitch to, and what funds might be a fit for them?
Yeah, like going out, as you'll all know, going out and fundraising, it takes up a lot of time for a CEO and for founders, right? So you want to try and be as efficient as you can with your time. And one of the things to do before you go out and go fundraising is to go into your homework and figure out actually who invests in my sector. I actually caught part of Barry Downs from Sure Valley's talk earlier, and he was talking about, if you're looking at VCs, they're looking at that they invest in your sector. Have a look at their social feeds and see, are they investing right now? So say, for example, we're in year 4 of our fund. Yeah. So we're going to be looking, it's a 10-year fund. That's the kind of the life cycle of a fund, right? So you're going to be looking at, in ours, and you're going to be looking at slightly later stage companies. So while early, in year 1 and year 2, we've done 18 deals to date, right? So in year 1 and year 2, we're going to be looking at slightly earlier stage, very much seed. As we reach, as the fund matures, we're going to be looking at slightly later stage. So now we're looking at pre-Series A and Series A.
Yeah.
So therefore, when we're going out and talking to companies, you're always looking for a pipeline, right? So for sure, I'm happy to meet early stage companies all the time for the next fund, right? But right now, when we are in year 4, we're looking for companies that have, an increased level of traction. So, when they're getting to that Series A, you're looking at kind of in around that million ARR, you're looking for those. So doing your homework on that is going to shorten your time. It's going to make sure that you're getting in front of the right people at the right time of their fund, right?
Yeah, no, absolutely. People can, I have one final question, but please make sure to upload the questions into the app. If you have anything, right, drive it in there, right? My final question for you folks, right, is with the most recent downturn, right, traction probably is something that is more important, right? What are some key metrics that you like seeing at every single stage and has become more important to you? So for you,
Sure, happy to start. So in the Web3 space, I mean, it's the metric, to be honest, is some of the acquired users you may have, any kind of user base, any kind of proof of an audience that your product may have is good enough for us at this stage. But it's also, anything that suggests to a potential use case that is representative of the market, right? So you have a number of use cases that you can use and say, okay, I have these. I think that these use cases are intuitive for a product. That is good enough for us at that stage because it shows where it is that you want to go. And again, that's taken into consideration that the blockchain space is quite new and in its infancy. So yeah.
Super.
So yeah, certainly traction is very important, but I could say come to that in a moment. But the other thing that comes alongside that is just the deeper understanding of your own business model, your own unit economics, in terms of how this business goes from a business that needs to burn cash. All startups need to burn cash at some stage, what the path to getting to a stable position for your company is and what the most efficient way of getting there is. So when we speak to founders very early on and they understand, deeply their own business model and how they can drive their own company to a point of self-sustainability, that's super interesting to us from the get-go, especially in this market. But when you think about traction can mean lots of different things. We invest in companies that are pre-revenue very often as well. So we still look for traction on those companies. Traction doesn't mean that they've signed loads of contracts. There's some instances in which traction can mean they've built a super product and they've tested it with some initial users. They have good buy-in from these partners, and they may still not be at the point of commercialization, but they've even have these partners that they can introduce us to kind of validate the concept on the ground. So that's traction as well. When you come a little bit later to pre-Series A, Series A stage, traction absolutely can mean revenue, and sometimes it means demonstrating what your average contract value can be. Demonstrating that people find your product really sticky, that they're not churning away really quickly over time, and ultimately that there's a willingness to pay there and at what price point. So having gone through the process of testing your pricing model effectively, that's also traction. So there's a few different ways that you can look at it, but certainly more important than ever.
No, I think you said very the most important metrics we're looking at. For me personally, I'm obsessed by products and showing that your product obviously is working well and so on, but also the love of your customers for your product. For example, by doing some case studies and kind of have some, 1, 2, 3 power users that will spread the love that they have for your product, and also the usage rate. So is it something that is being used every day, once a week, to show that now, as Kate was saying, it's sticky and they couldn't live without your product. And that's something that I think it's super important at every single stage, apart from obviously kind of the unit economics and so on.
I think that goes back to Paul Graham's thing, right? It's better to have 3 people love your product and want to die by it rather than having 100 that kind of like it and having that way.
Yeah. Listen, I'm going to echo everything that our panelists have said. If it's okay, I'm going to come back to one of your original questions, though, because I think we were talking about how you engage, with VCs and how do you demonstrate that? And actually, referring back to the Siri talk is, demoing your product
Yeah.
for us really is an opportunity for you to bring it to life for us. It demonstrates, you can showcase the power of what it is that you built. It doesn't matter that it's clunky. It doesn't matter that it's really early, but actually what it gives us an opportunity to show not only your passion for it and what you've built, but also how your customers are engaging with it. So it's a really great opportunity. Demo your product for us in the middle of your pitch, rather than just showing us screen grabs. That's just kind of a practical takeaway piece. But rather than just showing us kind of screen grabs of what the product looks like, sometimes if the stuff's really early, you may not have it all built yet. But you know, that's what I want. That's kind of what I want to see.
Yeah, no, it's picture says 1,000 words, right? And like seeing a live demo is probably a million, basically, in that way. DC, can I do one audience question? Is that okay? Do I get it? Okay, good. Everyone, and say it in a sentence or less, right? What's your preferred way to be pitched? Should people hit you up on LinkedIn? Should they email you? Should they stand in front of your house with a big banner? Like, what's your preferred way? Niamh, do you want to kick off?
I'm open to all those except sitting in front of my house.
Okay, good.
Honest with you. Look, honestly, you know, you can find us on our website. Please feel free to get in contact. And I would always say to you, it's never too early to come and talk to us. You know, it's really important. We'll give you as much feedback as we can. We are happy to share time with you because we also want to see that, you know, from the time I meet you to the time I see you again, that you engage me again. And, you know, in my head, I might kind of think, okay, it might be 6 months before they come back, or, you know. And when you do meet people, what I would say, is do keep in contact. Share with us your you know, the milestones that you've achieved. Share with us, you know, your updates and that. But it doesn't really matter, like whether it's LinkedIn or wherever you find us, come and find us, website, you know, do get in touch with us. And yeah, you know, we're always really excited. Sorry, I was going to say was, you know, when I think in my head, I'm going to see in maybe 6 months' time before they'll get a product or they'll get, you know, whatever, the first customer, because they're kind of saying, oh, you know, we're going to, you know, we're on the verge of negotiating a deal or something. If you come back to me in 3 months' time and you say, not only did I get that customer, I also did this, or whatever it might be, or not only did we, you know, deliver this feature, or, you know, this part of the product, we've also done this, we've tested it with these. That's kind of exactly that kind of, that's really what I'm looking for. So. Absolutely.
Carole, stand in front of your office. Is that the way to go?
Could be. It shows a lot of dedication. Yeah, honestly, email or LinkedIn, both ways are fine. I think something that I find a bit more exciting than kind of the traditional message is when you show that you had a look maybe at the portfolio of the fund and potentially doing kind of a reference on one of the portfolio company, saying that, I don't know, it could be a good fit for both of us because of this reason. I think it always feels nice. It's like when we outreach for founders, we always try to make it a bit more personalized, and I think it goes both ways.
Kate?
Yeah, I'm the same. I think I'm open to LinkedIn. I know some VCs don't like LinkedIn. I think it's definitely a great way to reach out to people. I have my email address on my LinkedIn, so always happy for people to grab my email address. Sometimes email's a better way because things don't get lost. But certainly open to both approaches. And I echo what Niamh said in terms of when you've had a first conversation with a VC, doing monthly emails and having everyone you meet along the way on those emails to allow them to track your progress is a really great way to go about keeping people up to date as well. So yeah.
And then final, Filippo.
Yeah, I was going to say, most of my contact information is openly available online. So let's start from that. But I prefer actually LinkedIn. I just spend a lot of time on the platform. But what I will say, please don't send an automated message. I know that some are kind of doing the cold outreach. If you can do it warm, better. But if not, then at least do it personalized. And if it doesn't work once, try it 2 times. You know, sometimes people miss the message. But yeah, I would say LinkedIn is definitely the main one.
Super. Can I have a massive round of applause for this fantastic panel?